What is up, YouTube? We're back, and today we're talking about the most important tech earnings of the week, Nvidia. Now, the results are dropping soon, and the stakes couldn't be any higher. But before we get started here, guys, I wanted to make something very clear. The usual, I'm not a licensed financial advisor. Nothing I share in this video should be taken as financial advice, right? Guys, at the end of the day here, my goal is very simple. I'm here to spark ideas, share insights, and maybe point you in a direction you never thought about. And just so you know, again, a lot of the plays, a lot of the stocks I purchase, a lot of the options I mention are plays I'm using for my own portfolio. But again, please do your own due diligence before you follow me. Now, you can choose to follow, but again, that is entirely up to you. Now, with AI demand absolutely exploding and political tensions heating up around Donald Trump and US-China relations, one big question is hanging in the air. Can Nvidia keep defying gravity? The hype is real. It's been real. Analysts are projecting around $46 billion in revenue for quarter two. Now, that's a 50% growth year over year, which is insane numbers for a company already this massive. And obviously, the driver, AI chips. The demand is so strong, it's practically squeezing every corner of Nvidia's business. From data centers to cloud computing to every startup trying to get their hands on their GPUs. Now, let's back up a little bit. If you don't know what Nvidia is, I'm gonna break it down for you. Now, Nvidia basically invented the kind of computing power needed to train and run artificial intelligence, AI. So at this point, they're no longer just a chip company. They have evolved into a full stack computing powerhouse. So what does that mean? They build the hardware, their GPUs are the most powerful on the market. They build the software, the tools and libraries developers use to actually run AI. And they build the massive systems that connect thousands of GPUs together to power artificial intelligence inside giant data centers. Basically, think of Nvidia as the brain factory behind self-driving cars, AI assistants, apps like ChatGPT, fraud detection in the stock market, and even their algorithms. They tell you, they recommend what you should buy or what you should watch next, what you should sell, etc. So basically, their tech isn't just about speed, it's smart, it learns, it generates content, it makes decisions, and because it all comes from the same unified platform, their GPUs and software stack, they can plug into industries across robotics, medicine, finance, cloud gaming, and more. So in short, Nvidia went from powering video games to powering the entire future of AI, robotics, medicine, and digital technology. And that's why they're not just winning, they're shaping the next era of computing. But here's the big picture. With the stock market sitting at all-time highs and expectations already sky high, Wall Street and retail investors like myself are all looking at Nvidia's earnings as the deciding factor whether the S&P rallies or correction time. Now, if Nvidia smashes earnings, the S&P 500 could rally and probably will rally and break into new highs. But if they disappoint in a big way, I think the market faces a sharp correction. In other words, this one earnings report might decide the direction of the entire stock market, and that will be happening later this week. So what's Wall Street thinking about Nvidia heading into earnings? Well, again, the company's dropping Q2 results right after the bell on Wednesday, I believe, and the hype is huge. Analysts are basically all in on this one. They're expecting record numbers. We're talking adjusted earnings per share of $1.02 and revenue jumping to about $46 billion. Now, that's not just good, that's over 50% growth. For a company this size, that's insane. Now, they're expected to post that $1.03 per share, and if you don't know what that means, don't worry, I'm gonna break it down for you. It's actually really simple. EPS is basically a way to measure how profitable a company is. Think of it like this, right? Nvidia made a big pile of cash, a big pile of money. EPS, right, just tells us how much of that pile belongs to each share of stock outstanding. Obviously, the higher EPS, the more profitable the company looks. So when we say $1.03 EPS, that literally just means for every single share of Nvidia you own or outstanding, the company made $1.03 in profit this quarter. Analysts watch this number closely because it's like the report card for the company's financial health. If it's higher than expected, the stock usually pops. If it's lower, well, then obviously Wall Street will get real cranky real fast. But here's the catch, and here's where things could get a little rocky. Export restrictions with China could slow them down, and on top of that, they struck a deal here with the Trump administration. Now, 15% of their revenue, right, on their H2O chips that are sold in China, the money they make from selling that specific product directly goes to the US government as part of a deal. So the real question is, does that actually drag down the company's results, or does Nvidia just power through it like Wall Street is expecting? Right now, analysts have a pretty wide target for the stock. At the low end, it's at about $155, and at the high end, it's at about $225. With the stock currently sitting at around $180, there's definitely room for some upside. The numbers come in high. Remember this, it's not gonna be pretty. This isn't just about Nvidia. With the S&P 500 at all-time highs, this report could be the deciding factor. Do we rally higher, or is it finally correction time? Now let's talk strategy, guys. Quick disclaimer. Again, I'm not a licensed financial advisor. This is for entertainment and education purposes only. Me, personally, SPY breaks 650, which I believe it will do. The end of this week or early next week, I'll be loading up on puts. September tends to be a rocky month, and I think Nvidia could be the last leg up before we see some profit taking across the board. Here's why I think this will happen. We've had a massive run fueled by AI hype, FOMO, and big earnings, but valuations are stretched, right? Breadth is weak and sentiment is pretty euphoric right now. And that combo usually leads to a pullback. Add in things like interest rate pressure, geopolitical risk, and well, markets don't move in straight lines forever, right? But that combo usually leads to a pullback. And then we add in things like interest rate pressure, geopolitical risk, and well, at the end of the day, markets don't move in a straight line forever. And that's kind of been what's happening. That said, long term, I'm still very bullish. Trees just don't grow to the sky though. I do think we need a healthy reset once we break all-time highs, and then once that correction does come, I think we do push even a little higher. I wouldn't be shocked to see SPY heading into the 670s or beyond later this year or early next year. Anyways, that's just my perspective on the market right now. What do you guys think? Is this, the start of a September correction, or do we just keep ripping higher? Drop your takes in the comments. Smash that like button for me, and if you found this video helpful, don't forget to subscribe. The next weeks are going to be very wild. I think maybe the end of this week is going to be pretty wild, but I do see SPYs at all-time highs at the end of the week or early next week. Let's see how this plays out. Anyways, good luck, and I'll catch you guys on the next one.